it'll be great to talk to ICICI Lombard. Hear out a conversation that they had with Hiral.
Gopal Balachandran, CFO at ICICI Lombard, joins in. Welcome to the show, Gopal, and always a pleasure to speak to you as always. My question coming to you is, a strong top-line growth, a decline in profitability as well. What has worked and what has not worked?
So I think good morning to you and good morning to all your viewers. And before I kind of respond, this is the start of a new year. So to that extent, Happy New Year to all of you and your viewers as well. So let me put this in context. I think if you look at it from an ICICI Lombard standpoint, what we have always articulated is, as a company, we have always been looking at driving profitable growth as a theme. And that's something that kind of gets exhibited even when you look at this particular quarter. The good news is something that I had spoken even in the last quarter, as in to say that some of the regulatory developments that have happened during the last couple of months has kind of created a lot of stimulus on ground in terms of exhibiting better customer demand. And that's reflected also in terms of the growth in the insurance sector as a whole. Relative to, let's say, the first half, where the overall industry growth was largely exhibiting a single-digit number, the market has started to exhibit a double-digit number growth. So in that sense, even the overall market is starting to do well. And even last time, I think when we had kind of spoken, we did say that whenever the growth momentum starts looking very, very positive, ICICI Lombard will obviously continue to seize the opportunities across lines. And that's the reason when you see the industry growth, as I said, of 11.5% for quarter three, overall for ICICI Lombard, I think the growth has been 13.3%. So clearly we have had an outperformance in the context of overall growth. And this has been all across. I think we have been able to kind of do very well on motor, which has been a huge comeback story for us. Health, any which ways, I think we were always doing well, at least so far as this year is concerned. I think that continues to drive momentum on ground. And even commercial lines, as we speak, I think we have been able to, while we have been maintaining certain leadership in marine cargo and liability in the past, the good news is even on engineering line of business, ICICI Lombard has been able to get to market leadership. So it's been an all-rounded growth that has kind of aided the quarter three numbers. And as you rightly said, it's also kind of aided by some of the regulatory/governmental interventions which are in the right direction. To your point on profit, I think this is something that I've spoken even in the past. The way the accounting prescriptions work, whenever you kind of exhibit relatively faster growth, the requirement from an accounting standpoint is your cost of acquisition is something that gets expended upfront, whereas the benefit of earnings is something that will happen over a period of time. So when you start looking at it from an absolute standpoint, then obviously you will start seeing, let's say, the relatively profit getting impacted. But the good news is what we have been telling the streets and to all of you, what we largely look for is to try and deliver an ROE in the range of 18 to 20%.
So are you saying ROE will be maintained in that 18 to 20% range?
I think so. If you look at what we have kind of largely played through across quarters, is to deliver an ROE in that range of 18 to 20%. Again, as I have been saying even in the past, it is always better to look at numbers on a year-to-date basis, because in a given quarter, there can be always various factors that can influence outcomes. But on a sustained basis, the intent is to make sure that we are able to deliver the ROE in the range of 18 to 20%.
Got it. When you're talking about the 9-month performance as well, if I look at the combined ratio, it has worsened, I would say, to 104.5 from 102.7. And this is on a year-on-year basis as well. Even on a 9-monthly basis, it's a number which is close to 104.2. So are you on track to actually achieve the previous medium-term target of 102% by the end of FY26?
That's a good question. Again, let me put this in context. I think if you look at what we've always said is that the movement of the combined will be relative to, let's say, where the market is currently positioned at. Of course, we have been relatively one of the early ones to declare results for quarter three. We will wait for the rest of the players to see in terms of what is it that they're exhibiting in terms of outcomes on combined. But again, when you look at the half-yearly numbers, which we have for the entire market as a whole, the industry as a whole is running at a combined ratio of almost 119%. And this number, maybe half year of the previous year, was 113. So there has been a significant deterioration of combined from an overall market perspective. Vis-a-vis that, if you would have seen ICICI Lombard's numbers for H1 to H1, our number moved from 103 to 104. So we were kind of relatively far better. And the point that we have always made, even in the past, is the relative gap between ICICI Lombard's combined and the industry combined ratios have always been at least more than 10% plus. So hence, to that extent, is where we are kind of operating at. I think what we keep looking for is, again, the point that I made in terms of some of the accounting prescriptions. At any point of time, we do tend to make investments in avenues of growth for the future, the cost of which again gets expended in the periods for which the reporting happens. So, for example, we are continuing to invest in technology, we are continuing to invest in scaling our customer service capabilities and in distribution. Now, all of this, even in the past, we have talked about this impacting combined by anywhere between 1.5% to 2%. And hence, to that extent, the numbers have to be viewed relative to that. And but as I said, I think at any point of time, ICICI Lombard's combined has been better than the industry combined at least by 10 percentage points plus.